Now, by and large, when you buy a truck, trailer, all that type of stuff, it is a fixed interest rate. And now, even though rates are going up and prices are going up, in the end, you could be actually getting a much better deal if you lock in your rate right now.
Welcome to Stream, a trucktractortrailer.com production. My name is Zach Miller. I'm your host, and I'm honored to be joined again by Andrew Johnston, who is one of the co-founders of TrueCore Capital. Andrew, welcome. Thanks for joining us today.
Yeah, pleasure to be back.
So, this is really interesting because you and I are pretty young people. I am a little bit older. I have to say, I have to out myself there. But the point is, you and I are both under 40 years old. So why do I bring that up? Because we are seeing the highest inflation that we have in 40 years. So in our lifetime, Andrew, this is the highest level of inflation. So let's talk through that. Let's talk what that level of inflation means for trucking, for truck prices, really for the industry at large.
Yeah, I mean, it's super multifaceted. In general, you go to the grocery store, things are going up. You go to the gas station, things are going up. But when you talk about trucking, pretty much everything related to trucking is going up. So, I mean, let's start with the obvious one, truck prices.
Yep.
I think anybody listening to this podcast that is interested or has bought a truck in recent history has seen that things have gone up. 2016 is going for 50, 60, 70K or now going for 90K.
Oh, yeah.
I think recently I saw 2020 or come through my desk, a 2020 that was coming through at 220K. I mean, that in and of itself is astounding. I think in most places in the United States, that's a small house, right? Or even a large house.
Yeah.
But now you associate that with gasoline, you associate that with other financial products. It gets the dollars and cents are racking up for most of the industry.
So now we have the inflation part of it, right? And then the second part of that is, well, the Fed is going to raise the interest rates. And so some of us in the industry might be dealing with sort of a two-pronged crunch there with high inflation and then increased interest rates. So let's talk though about some of those prices you mentioned, right? Some of those really high prices, but people still need to buy assets. Freight needs to move. Old trucks are breaking down. They have to be replaced. What do you advise for people who they need to buy, but they have their concerns about maybe the interest rates, maybe the price in general? What do they need to know?
Okay. Yeah, I mean, in general, you just need to be careful about who you're working with and the type of contracts that you're entering at this point. It's becoming more and more pertinent to start paying a little bit more attention. I know there's a lot of banks out there, local credit unions that do adjustable rates on their equipment loans and equipment leases. For example, we did a loan probably a year or so ago that was the interest rate was prime plus something, prime plus a quarter. But prime is set by the Fed. So that person, they agree to have an adjustable interest rate. Now, by and large, when you buy a truck, trailer, all that type of stuff, it is a fixed interest rate. And now, even though rates are going up and prices are going up, in the end, you could be actually getting a much better deal if you lock in your rate right now.
I think that's exactly it. So it's not yes, there's sticker shock, but you have to look deeper at the price because the price may not be the problem if you get the good rate. If you get the rate that works that you need from a lender like TrueCore, of course, you could very much come out ahead of this.
Right. Well, I mean, you have to think about it kind of like a traffic jam.
Right.
Things happen, everybody gets piled up here, and then the result happens. So things are happening, the pileup is starting, but we haven't really seen the repercussions yet. Most lenders, I mean, you see media all the time saying, "Oh, our rates are now at 3.25, our rates are now 3.5," essentially promulgating that they have the lower rates and that they're continuing to lower the rates. but they haven't experienced the Fed raising the rates on them, and your local lender, your local credit union, your local alternative lender will have their cost of capital going up in their secondary market, which is going to bleed into the consumer. So that being said, if you lock in a nice little approval today, get in a truck that is a fixed rate, a year from now, 2 years from now, your 6% interest rate that you got and you're super happy about could easily be an 8 or 9.
Exactly. What have you been hearing too in terms of the supply? Because I just, for me, I think towards the very end of 2021 and the very beginning of 2022, I heard a lot of optimism that things were going to start to flow, towards end of Q1, beginning of Q2. That conversation has ceased pretty quickly, I would say. And now I am hearing, unfortunately, a continued sort of supply crunch for 2022. Are you hearing something similar?
I've noticed that some dealer networks are more affected than others. Basically, how connected you are overseas, how good was your supply chain, like it all kind of plays a factor. But by and large, I would say that it is still going to be an issue probably until 2023. I mean, we have more than a few people that wanted to buy a truck new, have placed their deposit, and there's one example that I'm thinking of that their truck was supposed to be done in January, then in February, then in March, and now, I mean, honestly, I would estimate probably not until July or August for that one to go through.
I heard from a pretty mid-sized fleet up in the Northeast that they placed 2 separate orders last year. The second order they placed actually came last month, I believe. The first order it's still TBD. So now that's when they're looking at the secondary market, just like to plug those holes because they don't know when they're going to come. I imagine that's fleets all across the country.
Right. I heard something very interesting, probably that will interest everybody, but I have a few friends that work at consumer auto dealerships. Specifically, I was at a BMW dealership, and they had mentioned that inventory is starting to come in, but because of the semiconductor issue and the chips and all of that some of the goodies aren't in the car. So these BMWs, these nice trucks, don't have they have levered recliners instead of the actual the auto recliners, or maybe some of the windows have to get rolled down. I mean, that's kind of extreme, but that is happening, that these little goodies, and to extend that into the trucking realm, I'm sure there's plenty of things within the Class 8 vehicles that could get skipped on. So again, got to be careful, got to make sure you're getting a quality product.
Well, now we're talking about something really interesting too, because so many of them, so many people who look to buy are, you're talking about fleets, you're talking about big safety initiatives, safety and emission standards, frankly, in many places. And all of a sudden, when you look at something like that, it's like, oh, geez, I really should just get a 2017, 2018 and ride it as long as I need to, because if you're going to spend, what are we talking about now? 350, 400,000 even on a truck, and it doesn't even have all the features you need. I mean, now we're just talking about insanity. It's like, right. You have to bite the bullet on maybe some of these inflationary prices on the used market, and just make sure the truck is safe and inspected.
Right.
But now all of a sudden, I think that changes the game for people.
Yeah, definitely. I mean, the used market is hot, but it's hot for a reason. The only reason that the used market inflates as opposed to deflates is because the new inventory is not there to meet the demand. So, I mean, not only are people buying used trucks because that's what's only there, but now they're starting to notice that these new trucks are coming in not exactly meeting the specs that they had wanted or ordered. So now they turn to the used market again. And it's just a self-propelling problem.
It really is. But is this, I mean, have you seen, I know none of us have seen a market like this. And, right. As we mentioned, it's 40-year high inflation. But have you seen the level of activity on the secondary far exceed the primary? before. Have you ever seen anything like that?
No, I mean, I haven't. When you look at statistics, even on equipment, trucks, software, all that stuff, the new market is the king, right? You want to buy new. It's the shiniest tool. It has the most specs. Um, it's, you look good to your neighbor, like all that good stuff, right? But now it's like, hey, look at this used truck I bought. It's so much better than anything new coming out. And used is currently sitting on that throne, and I foresee that continuing to be the case well into 23.
I totally agree. I was, like I said, I was kind of optimistic the beginning of the year, but no, unfortunately, I don't think that's going to happen. Does that, though, the fact that secondary is king now, the fact that interest rates are going up, the fact that we have this, generational inflation, have you seen a different sort of credit worthiness quality in your applicants than before, or has that just kind of been the same sort of gradual shift as the prices?
Yeah, I mean, the most pertinent thing I've seen, especially in the first time buyer market, is most lenders that do play in that space, they expect the first time buyer to buy something that's 50, 60, 70, 80,000 max.
Yeah.
I haven't seen an $80,000 applicant first time buyer in weeks, months. Every first time buyer that's coming through is looking for a minimum 70. So I think that from a creditworthiness perspective, that the first time buyer is probably getting hit pretty significantly. As you grow your company in the mid-sized fleets, or even 3, 4, 5 in fleet, you got to be careful. You have to track your cash flow about what these trucks are coming out to. But I mean, by and large, everybody's affected. I mean, inflation is inflation. Yeah. But I would say that maybe the larger fleets are probably handling it the best, because they have a little bit more margin to absorb some of the higher prices. But still, it does have to be absorbed, and it is a problem.
I'm curious too about maybe what about something like what are some tools that some of these first time buyers can use to sort of help them out here in this situation? Like, for example, I don't know, what about the possibility of they have like credit card debt, like a pretty significant credit card debt? And what if they call TrueCore and say, hey, can you give me like a working capital loan to pay off this credit card debt? Is that like a better type of loan to have? Like, is there a way they could sort of shift their debt around in a way that makes them more appealing to lenders?
I think that is like kind of like debt on debt, and maybe not something I would recommend, because like working capital by and large is going to be less expensive than maybe your traditional credit card. Well, at least hopefully, knock on wood, right? So the one thing that I would recommend, especially in the first time scenario, and the thing that we deal with every single day constantly, is essentially, I mean, I don't want to call it hiding your income, but getting paid and actually putting on your tax returns versus like maybe keeping in cash, mattress money, like that type of situation. Because these first time buyers that are coming through, they're getting disqualified based off their income and debt to income that they can prove. But every time we say like, hey, your debt to income doesn't look like it's getting there, they say, whoa, hold on. I have 20K sitting here. Or actually I got paid 50% in cash and I just didn't report it. But these lenders, because they can't really rely on the value of the truck as much to like be that safety net for the lending side. So they're really relying on your debt to income. So my recommendation for those people in that situation listening is start, getting your ducks in a row, flow everything through your bank accounts, get as much income readily provable when you do actually decide to make that jump into your purchasing position.
That's a big shift for a lot of people in the industry, as you well know. But that's fascinating. And but really, that's the whole point of this conversation. That's what we're doing here. We're talking about things that people really haven't had to deal with in a long time. You need to start changing your thinking, though. You need to adapt to the world around you. No matter how much you may not want to, that's what you have to do in business to survive.
Right.
Andrew, somebody wants to get in touch with you. How would they go about doing that?
A few ways. You can go on our website. There's a little contact us form. There's our actual application. We do have a general phone number. You can talk to sales. You can talk to credit. You can talk to whoever you want to. In general, you can call in. We're happy to, not only review your application, but if you have questions about how to set yourself up for success, especially with some of the stuff that we've been talking about in terms of income and what you need to do to get ready to buy, always happy to have those conversations. We got a solid team behind me to answer those and help you through it, as well as myself. So we look forward to talking with you.
Awesome. Guys, like what you hear, talking about finance, freight, logistics, trucking, all that fun stuff, please be sure to subscribe, and we'll see you next time on stream.